we talked a lot about bridging gaps since we started this session. Gaps in regulations, gaps in mindset, gaps in data. Can you share with us, everybody here, the gap you are passionate about coping with? Thanks.
Hi, everyone. Thank you so much for the question, Thibaut. My name is Lekha Patmanathan. I'm a senior manager at the Singapore Sustainable Finance Association. We are a platform to convene the industry on sustainable finance topics, opportunities. So I think that there's a gap. There certainly is, but there is a lot of opportunity for us to be able to close that gap. What I really liked about this panel and the title of this panel is the word collaboration. I think that with any type of collaboration, we can really close many gaps. So for finance, that's something that is a key enabler to driving development, sustainable development in technologies. And I think by being able to bring people together and collaborate on topics that we clearly have a lot of consensus on, we can really close the gaps by working together.
So, hi everyone, my name is Tamara Singh. I am what they fancifully call a Sherpa. It basically means I deal with tricky people who need different things and try and find a common ground for them to discuss things on and collaborate with. I do this in various ways. Today I'm here in the capacity I have as the Sherpa for the Sustainable Finance Development Network, which is part of APEC, the Asia Pacific Economic Council. And there I focus on transition for corporates, typically MSMEs around the world. And so from my side of the fence, the gap I perceive the most of is actually no one really cares. In the end, when it comes to the MSMEs, their incentives are so broken and the way we structure our incentives are so broken that it's very hard to actually drive true collaboration and interest even in that collaboration. And so when I was invited to this panel today, a week after I used my other Sherpa hat, which was around convening public sector representatives and private sector representatives at a C-suite or central bank regulator type level, and listen to them speak for a week on how they wanted to work harder at solving the problems, but coming up with essentially the same kind of things, I thought this was the perfect thing to say yes to. And so today you have me in a very specific capacity, trying to behave myself, but to be as honest as I can because of it.
Thanks, Tamara. My name is David. We are a climate tech fund, so we look at early stage companies, mainly in Southeast Asia, that actually work on solutions to accelerate the pace of change, which means both decarbonization solutions and enablement solution. In this capacity, the gaps that I'm really excited about is how much Southeast Asia woke up to the opportunity recently. So kind of similar, but different in the sense that there's a lot more activities and innovations that are actually driven in the market, where we see a tremendous amount of founders that really care and mission-driven founders in the region that kind of drive the change for the rest of us. We do think that we need more substitutes and more net zero and carbon light options. So I'm excited about the gaps across the categories. The ones that we're looking at specifically is all the decarbonization ones, so energy, transport, a bit of waste, et cetera, et cetera. We had interesting discussions about the panel, and we decided not to be moderated. So what that means is literally just shout questions at us. We do have questions for ourselves if you want. But we also sense kind of like the mood these days to be a bit difficult from a macro environment. What's happened in the US with the elections and all that stuff is kind of difficult for all of us to handle, right? And so we were thinking, why don't we organize like a giant psychotherapy session a little bit for all of us to kind of like talk about our emotions and stuff and try to divulge this. I do think like the strength of those fantastic co-panelists is we're actually all in this together. So I think it's really important for us to analyze what's going on and realistically like build some momentum for ourselves to kind of feel reinvigorated about working in the space we're in. So yeah, please chime into the debate.
And so I thought I'd immediately chime in with a little bit of emotional space. So I mentioned earlier the frustration I felt with dealing with policymakers around this particular period. And what was fascinating for me in the sessions I ran was how frustrated the policymakers were with their own situations. And what that reminded me about was, you know, in the end, we're all human. We all want to do the things we believe to be right, to feel the value and purpose in our lives. And sometimes we're, by circumstance, by incentives, positioned in a different way. So one of the big thematics I heard from various government leaders was actually from the chief advisor of a very large South Asian economy, he was just like, we really need policy coherence. So one of the problems we face these days is there's just that little bit too much systemic change in our systems, by which I mean our political systems, for us to really see through commitments. And so touching on the macro piece, and I will absolutely want to hear your view on this, I was so delighted by the Inflation Reduction Act, because so much money started flowing. And I've been a cynic on secondary carbon markets for the longest time, because they don't really help the projects, they kind of help the trading. But what I find fascinating was like money was actually starting to go to the projects. And so queue up like last week, I was a little bit distressed when people started divesting. They started leaving their financing commitments early because they just couldn't tell what was on the horizon for them. And so that really took me back to like, this is the impact we have now when there's just that little bit too much uncertainty, that little bit too much too much fear to stand your ground and stick to what you want to do and what you believe in. And so to bring it to a more positive vein, it also makes me super optimistic about Asia. Because in pockets of Asia where there is quite a chunk of funding, and we heard earlier from Trisector about the way funds sort of come together in Singapore or in Hong Kong and then get divested out by philanthropy and the rest, we actually have very stable political systems here. I know we are looking at an election ourselves, but we're not looking at a very disruptive change in our political structures. And so actually, Asia feels really good right now. This feels like a fantastic place to be to try and make some change. And for those of us who are looking at where change needs to happen, I think Asia is actually really key. So that gives me a lot of hope and optimism. I don't know how you're feeling, because obviously you're very impacted by this kind of stuff directly.
Yes, I am. So I think there's three dimensions to kind of look at the problem, right? The first one is, I think since COVID, we really see the pace of change accelerating, specifically from a consumer psyche standpoint. Like, we don't have to talk about climate change anymore that much in our conversation, because most of the people are aware of the problems and the problem that it actually raised, right? So it is a complex scientific problem, but most people have digested that. The second kind of sort of positive statement, and I think I resonate with your point, is when we started on this journey, it was very much a conversation of how much money we could get from US and Europe back into Asia. There's now basically enough of a macro trend locally and enough care and enough, frankly, motivation for the corporates themselves to kind of start to move that directions by themselves, which is very encouraging. Now, realistically, it's a bit slower than what we've seen in the others, but to your point, it's less volatile. We're less attached to which political system or party is gonna vote for. And that gives us a lot of hopes, right, from that standpoint. So from an investment standpoint, I think it's been a difficult macro environment on early stage generally, but it's not limited to climate, right? So there's an ensemble of reasons why VC funding is kind of slowed down and all this stuff. But what's interesting is it also gives us comfort into the investments that we all make in the early stage, just because the startups themselves will actually be stronger, not weaker. If we see the batches of startups that come out of usually very difficult financial situations, like after 2008, they're usually the best batches of startups. So this is the moment to build, and this is the moment to go. So we're really excited to some degree. So there was a part of what I liked is your personal story. Maybe I can just chime in on this, right? I came from finance, FinTech, and I kind of went into climate. You're doing kind of the other way. So I would love to kind of see your point of view on the situation so far.
Yeah, it's funny because I actually met David when I was in those crossroads. I actually started my career in healthcare, and that's actually where I discovered sustainability, because healthcare is actually very resource intensive, so you wouldn't naturally think that sustainability would come out of it. But that's what really had me inclined to think, what can we do to make this better? So I moved into the energy management space, energy efficiency, which is really an approach that can apply to any sector for how you can be more mindful with your resources. And that got me into the tech side, because you use technology, data, AI, blockchain to try to understand data systems to see what we can do to make processes more efficient. And what I found is that the world is full of great tech. Climate tech is everywhere, and it works. And there's a book by Paul Hawken that I love called Project Drawdown, which you might know, that really says that all the tech out there exists right now today to reverse climate change, to actually reverse it. It's possible. So then I thought, this is great. Let's just do some tech work, right? So I worked in buildings for a long time, helping buildings decarbonize, and I realized there's a ceiling here, and the ceiling is not the tech. The ceiling is the funding. Where is that going to come from? And at that time, this was 2015, we needed 3 trillion a year to be able to bridge that gap. And I thought, that's insane amounts of money. We don't have that. No way. And then I went to school and I realized actually we've got a lot of money. There's a lot of money sitting, trapped in assets that we don't want it to be in. It just needs to be transitioned out. So that was 3 trillion back in 2015. I think now it's about between 5 to 9 trillion that's needed in order to keep us to 1.5 degrees by 2050. But it is possible. So right now, what I love about what I do is that I don't actually invest. I don't have any money. But what we're doing is we're bringing many different stakeholders together to come to an agreement on what needs to be done in order to bring finance to different projects. So this can be blended finance projects, it can be carbon markets, it can be transition finance. But together, again, I come back to the collaboration bit. If everyone is understanding that this is really important, this is really urgent, we can actually do it together. So having that on-the-ground tech experience does help give me a bit more understanding of how it works, but really it's all the big wigs out there that has access to all the funds, and they need to be convinced. And I think FinTech, data, climate tech is a really good way to really move the needle forward.
So exciting. We have our first heckler question.
Because a lot of the time, yes, the tech is there, and there's small-scale proof of concept at a small scale, and then and a lot of the times, then people are saying, oh, but we need to give you a lot of money to scale this up. We need to prove that it can be scaled, which you can only do with the money. So there is this chicken and egg issue with a lot of these new the technologies that are there. So I'm just wondering, like, in your minds, like, how can we use collaboration to sort of break that cycle of chicken and egg and try to get some of these things to scale?
I think there is new technologies out there, and those ones are maybe not at that TRL level of readiness that a lot of investors will jump the boat on. But there's beyond that, though. There's a lot of things that are proven to work. Right? There's not something that we need to come to an agreement on. It's just more being able to access that funding and bring it down. So I think for me, what I would want to put multi-millions of dollars on are things that are known to work. But yes, I agree that innovation is incredibly important, and we should be able to support that still. And yeah, it is tricky. I've done a lot of pilot projects that never really went further than that, because then there's this gap of, well, how are we going to roll it out? Because it's not just the tech that works, it's actually the whole ecosystem that has to come together to be able to structure something over time, and the risk management that goes along with it.
So funny enough, this is something that's quite fresh for me. So in the sessions I just did, there were 2 things that I tried to do, and they were because of the lessons I'd learned over 20 arduous years in finance. One is that if you build tech to meet a user's needs, it's unlikely to ever scale. I used to call this the why do unicorns not succeed outside of India when they're unicorns in India problem, which is basically India itself is such a specific market, and you can do so much in India and do so well in India that when you try and cookie cutter it into, let's say, Indonesia, it's very hard to actually sustainably succeed as that form of business. You have to localize, you have to meet the needs in the community you're in. So that thing about making it more localized and not trying to cookie cutter is actually very counterintuitive for tech builds these days, because of the way we've moved towards platforms and SaaS solutions where everything's scaled by design. So if that scaling doesn't work, product struggles. Second thing was, you have to bring the pain points into the room really early on. And so when you're hustling and trying to build, it's actually very counterintuitive to go to the biggest naysayer who's going to kind of turn up and like crap on your dreams a little bit and say to you, like, here are the 10 reasons why your product won't work. But it's actually super useful to help you not do those 10 things on day one. So what we've been doing recently, what gives me a lot of hope is the Asian Development Bank did this really specific, fantastic project in the Philippines where they worked with rural farmers to geocode bamboo. And bamboo is one of these things that goes into like resilient housing for disaster zones, which the Philippines unfortunately has a lot of. But they realized that they could do this huge traceability thing because of the way they'd paid these rural farmers to geotag their bamboo. They could then create like a sustainable supply chain for the produce of the bamboo, which then became housing for homes, went around the world, it's carbon removing so they can get credits. It accidentally was a hugely successful project. then they couldn't scale. They couldn't scale because bamboo is effectively a weed, and in agricultural countries, often there's regulation that prevents planting it at scale. They went to, because it was the Asian Development Bank, they went to the ministries, and they actually got permission to build non-invasive, to plant non-invasive bamboo. That was awesome. They brought it to Singapore. We did a design thinking session. There were 6 other economies that came to the party with bamboo growers local to each one, who then talked about their water needs and the rest, how they could make the rest of the supply chain more sustainable. The whole group, 6 different countries together now have come away with plans to bring this thing that's been proven in one use case into other countries, but starting with the problems on day one. I think that's fantastic, and I get really excited by things like that.
Similar. I'm optimistic about it. I'm just answering the same question for a second. Sorry. For the first side chat. I think the scale is interesting, right? We're lucky enough to kind of be 5-10 years behind what happens in Europe and stuff. I think a lot of the things, at least on early stage, that we started to see was, in the first instance, most of the VCs funding climate were thinking like a VC, right? Which means you are software solutions, you're going to scale, it's going to be this, right? Realistically, now we have enough learning from other regions that we know, the saying, it takes a village to kind of make. I think in climate is very, very true. What we started to kind of observe specifically for us was how much we were drawn to people that could actually help us scale the solutions generally. And we started to kind of gravitate to talk to the startups about what they needed. And generally, it was more about collaborations with the corporates and placement agents and other investment functions that actually look at the later stage kind of funding piece. And what was really interesting for us was that very naturally, we were already connected to those guys because we knew what we wanted in the end is the large impact. And so I think this is kind of like part of the learning scale. Realistically, if you look at the funding and the early stage success companies that have reached unicorn status in climate globally, and I think there's more than 100 by now, they are all really entrenched in their network about how they work with corporates generally. And so that gives us a lot of aspirations for the region. Again, 5 years ago, couldn't do it because most of the corporates didn't really care. Now everybody's working up to the opportunity and saying, I need solutions for myself. Find me solutions, right? And that's where the startups come in. So we're excited about that. Sorry.
Hi, thanks. My name is Rahul. So Lekha, you seem to be saying that we need a lot of money and we need it fast. And David saying it's not coming fast, right? So I think that's a problem to be solved there. But we talked innovation, but how about an alliances of innovation? Because there are lots of these innovations which actually complement each other. I think most of the investment, especially VCs, look at each investment on its own individual merit, but rather why not look at it as an alliance of, for example, the one which I'm working on, there is a renewables, then there is an innovation on insurance to make sure that there is a consistency on the return, and then there is a platform to aggregate renewables, and then there is a tokenization of the renewables, and then there is an exchange to make the renewables actually available to globally. So it's bringing the alliance of innovation, and which is creating a bit of traction amongst themselves. What's your thought about that?
Yeah, I agree. Sorry, I agree. And I think, so I worked in FinTech for 15 years, and it was insane. When I started to kind of work in climate, for my personal story, right, it was insane how much people really believed in this collaboration before competition in climate. We talk about it on FinTech and saying, yeah, we're all friends and all this stuff, but when it's down to like who's signing the budget and who's getting the customer, we really fight, right? I really think in climate, people really thought about collaboration. What's interesting in what you're saying is we also see it from an ecosystem standpoint. I mean, we looked at Indonesia transport, for instance, and we're thinking, okay, we need a good manufacturer, but we also need EV charging, and we need to transform the grid, and we need there's so many solutions that are interconnected. That's literally the play for us to kind of do really good portfolio construct. At the early stage, we can't demand on the startups to address everything. That's the reality, right? Because you're a small team, you have 10 people, 20 people, whatever. You can't boil down the world, right? So we need to start with what problem you address that is acute, that we can start with. And then realistically, relatively fast, we're actually going to say, okay, interconnected with corporates for some of the stuff that is infrastructure-led, For some things that are actually a lot more innovation-centric, then we need to go find solutions that are complementary. And we do find a lot of benefits for the startups to work with each other within the portfolio. The typical example is if you're selling to the same customer, why don't we share Salesforce, right? And things like that are actually happening pretty naturally. Again, 5-10 years ago, we weren't there. There was no connected dots, and the ecosystem was not clearly built the way it is now. But realistically, we see a lot of those, both organic and inorganic ways to basically for people to collaborate.
So I actually have a really fun story. Well, 2 fun stories on this one. So I have a lot of stories. I don't do much myself, but I meet fantastic people. The one I like is actually going back to our topic today about bridging the funding gap. So Climate Kick, who are a very large smart sustainable cities implementer for the European Investment Bank or something like that, they were asked to help make 100 European cities smart and sustainable by 2030. And they were given something like 100 million, which is not much to start. And they've actually been doing really, really well. And the way they've been doing really well is they have an alliance of sustainability practitioners who actually go in and do things, who instead of each applying for grants separately, they came together as a kind of consortium of people trying to achieve roughly the same thing in slightly different ways. And they just apply for funding together. And whoever's the most appropriate fit wins the project between them. They share I want to say that's like whatever the percentage operating expenses are, but they don't compete anymore. They just work together and they assign the work where it matters the most, and then they share the resources. So if there's capacity with one, they reallocate, so they don't have the same competitive dynamics. The other example I was going to share is weirdly from the Paris Olympics. And it was one of the things I spoke about last week, where I met the president of the Paris region and sort of said, like, how were you able to make the Olympics loosely sustainable? Obviously, it's not going to be perfect. I highly doubt it'll truly hit zero, but it is actually going to have added 12 billion euros of value to Paris over this window, right? And she was quite honest, because she turned out to be very much like that. And she sort of went, I only managed it because I haven't really had political competition to have this for this role in the last 9 years. So going back to policy coherence and the ability to like really stick to your plan and execute on it was really what she was saying, not quite her words. She ended up making very unpopular decisions, but it has been very interesting because they ended up rebuilding like the metro, creating new transport links, which was part of the controversy, new housing and all of that kind of stuff. All through innovations, not just mostly French, but also from like Ireland and all that through collaboration. And so I think that's like quite a nice thing where if you have the influence, the ability, the opportunity, and the runway to actually do it, then I think it makes a lot of difference.
So how do you make more such success stories happen? I mean, do you leave it to the VCs? Do you leave it to individuals? I mean, for example, I'm trying to do something, but is there a platform, an organization through which we can bring these innovators together and position them as not as individual startups, but as a cohesive unit? How do we, I mean, what kind of, for example, incentives could be there to make it happen?
So I'm not in the startup space any longer. I think David is good to answer that particular question, but how do the collaborations happen? Maybe I can lean into that one, right? So for example, what we do is bring people together. And when we bring people together, we get them all to be really honest in closed-door discussions about what works and what doesn't work, and what do we need to do to make it work. And sometimes it can be something as simple as, well, not as simple, but there could be more policy clarity that's needed. And because of a misunderstanding of policy, people can't move forward. So then let's talk about how can we change that? Any individual entity can't change policy. But when you work together as a consortium, you can go and say, okay, so I can do this, but this is stifling the market for me. Maybe they can be a window for a body to go through and help government shape policy. And for example, that's something that our association can do. So we are developed by MES. MES formed SSFA together with the financial sector to do exactly that. So what are the exact problems in the industry right now that is inhibiting financial flows? Another example would be in capacity building. So we need to do more. We need to bring up the industry as a whole. But we don't know what we don't know. So, how can we get people together to say, okay, so I want to collaborate with you, but I don't really know how to work with you. But there is a way to actually get together and identify what works. And what we do is we form working groups. And there's many international organizations that form working groups where we work through Okay, so this is what's stopping the market. For example, in blended finance, there's many different capital stacks that come into the picture, and they all want different things, but we want them all to pool their capital together to invest in one particular project. So how do you align everyone with different incentives, different risk appetites, different investment returns that they need, and different impact levels that they're looking for? But the idea is really to have a good understanding of what people are doing. And what MES is doing right now is they have a FastP platform where they want to create a framework that is actually a platform for blended finance. So we can list all the different types of capital providers available, what are all their requirements, and use AI, use technology to be able to filter through when a deal comes through that's not typically bankable. It can go through the system so that it can automatically allocate the right group of funders to be able to make the project happen. So I think it's really being true and honest about what you can and what you cannot do, and finding the right group in order to work that out with. And I think a similar conversation is in carbon markets, right? Singapore has a goal to be able to reduce all of our emissions via our NDCs, and all of them are going to be upped this year, hopefully. That's the requirement because of the 10-year mark at Paris. And so if all these ambitions are upped, we need carbon markets to work. But Singapore, as a small country, can't do it on their own. So we need to form an alliance with other regions in order to make it happen. So I think it is a lot about working together and understanding what we can, what we cannot do, because we have a shared ambition.
I can try to answer the question. I think it is hard work. Collaboration takes hard work. I think there's two pieces that for me is interesting. I think the structured ecosystem makes sense. So like find your network, right? Like find the activities of the individuals that can kind of lead, that could be punctual on certain problems that you're trying to face. Because usually there's somebody that is going to work on the same problem somewhere else and is going to address it differently. They could be a competitor, but realistically, most of the time, it ends up being a collaboration. I think for me personally, what's been very important to recognize was how much what I classified as serendipity was actually work, right? Like we work on a network where understanding fundamentally the individuals, their background and stuff like that, I was amazed about how much we can recognize in the individuals things that we didn't think about in our earlier stage. So, you know, you thought that this guy was a founder, but he happens to be connected to this other person that can connect to this corporate. We all have very rich histories and experience where it does take time to kind of learn each other and have some level of empathy. Remember this stuff because regardless if it's useful to you now, it will be useful to you in the future. And so that's what we kind of need to recognize ideally. When we spend a bit of time with students and stuff, and they're basically saying, but how do you create your network? Well, there's no real challenge to it, right? Like I think a lot of people are very collaborative in nature. We all have a little bit of time to kind of say, well, you know what? We're going to spend some time educating the newer generations or give our time to stuff like that because we believe that giving back makes sense. I think that's where it starts, but we need to do it with also our peers, right? Where there's networks that are both organic and inorganic. Again, like the startups are helped a little bit more because we do believe in the village, right? Like when we come as an investor, it's usually not about just the money, but it's also about the network that we're bringing in, right? So can we bring them corporates? Can we bring them relationship? Can we bring them other startups that they can collaborate with, right? So there's an inorganic way to kind of think about this as well. Just count on your network. Ask the hard questions from them too. That's where it starts, I think.
Something I'll add to that, just as a side, just think about how we met. So having a network is great, but actually it's important that you tell your story too. So if you are doing these amazing, fun, successful, great things, and you want the world to try it out, like it's a bit like open sourcing your data, right? Like tell the world this is this fantastic thing. It's happening in Singapore, and there are a few people I've seen in the room today. Like there's the an ASEAN network where people will share their stories, and people will respond. They'll be like, "Hey, that's awesome. Can I do it in Bali quite often, or Taiwan, or whatever the case might be?" So if you tell people and you make yourself available, it helps to actually scale your story as well.
That's quite simple too, isn't it? You don't need technology to do that. You just really need to be forthcoming. And
Old school, I would say.
Yeah, exactly. But that's what
need
works.
The human. That makes sense.
I saw the mic went for a walk. Was there like a tough question coming from the back? No tough questions, as unusual. Okay. Oh, there is a tough question.
Hello, panel. Maybe I should stand up so you can see me. Not really a tough question, but I'm Zan. I come from the IT space. Do you beginning to see a lot of these projects for sustainable impact, especially the FinTech space, where the evaluation will also include the technology solution itself? Because sometimes some of these solutions are actually more energy consuming, for example, right? And it may not be efficient and so on and so forth. Do you see, as part of the evaluation, also the evaluation on the solution itself, whether they are also low carbon and so on and so forth? Thank you. So that the solution don't become part of the problem. Thank you.
Yeah, from my experience in working on projects where we are not just decarbonizing an asset, but an entire building operation, you do a life cycle assessment. So you do look at the particular technology and how much energy it's actually using. So you can't not factor that in when you're saying, I'm going to help this building reduce energy by 4 to 6%. You do have to take into account what you're using. But usually for AI data analytics, it's not too intensive. But I would think it would be similar with bigger technologies. But I've only worked in the built environment sector, so I think there's much larger, more heavy emitting industries where I would believe the same LCA principles would apply.
I think we do, but it depends who asks the question, right? So I think it's on all of us to ask the hard questions, generally. If you're referring to AI, for instance, I think there's a fundamental shift that I wouldn't fight progress, right? I do think it has some component of that, but we know the flip side of the story on saying, look, energy efficiency is going to be a problem and we need to build this many nuclear reactor on top and all this stuff. I do think it's a consideration that is more pronounced by the time you actually do have experts that are connected to projects. So it used to be pretty insular to basically have some investor asking ESG questions. I don't think that's the case anymore. I even think that tech VCs are actually asking questions about social and governance and all this stuff, right? So that, again, comes with the mentality of saying you kind of need to look at, who's asking the questions to make sure that they satisfy some level. But we kind of embrace the complexity to make sure that we do. Do we do a good job across the board? That's not really the problem yet. I do think there's always things that we're going to learn about our calculations on carbon and all this stuff, right? Because they're hard problems to solve. But I do think we're on the right track.
So I'll just chip in something I've been seeing a lot more of recently. So I sometimes go and advise on deals, and so two things have happened. I don't think there's been any really marked progress in technology that hasn't also come with an increased consumption of energy in the history of mankind. If you go back to steam, if you go back to industrialization, everything has involved more energy. I think what I've started to see happening more and more now is not so much the valuation of a company's product being considering the way they develop their energy use, but more a penalty if they don't think about it. By which I mean, some people, for example, AI companies, they're effectively working in countries that may not have renewable energy grids or the source of, the ability to use cleaner energy or clean data centers. Quite often, investors will go in and say the condition of your growth and this funding is that your next market that you go to offers green energy, and therefore you move your business into a place that allows your product to be greener. And so I've seen the cost of not being sustainable sort of looked at. And I think that's been driven a little bit by the fact that carbon taxes are looming. I think it's also around the fact that people are a little bit worried about the criticisms, but also it's not hard now. So it's not that hard to say in your next target market, think about how you're going to do your business a little bit better. We reward you for the work you've done so far, but here's how we're going to help you improve, and that's our role as your investor. So that's quite, I think, marked as a different approach. Do we have time for one more question? Yeah, okay, they're going to give us a little bit more time.
Since you wanted a hard question, I think you made the point earlier that really for decarbonisation and for improvements in environmental outcomes, we have to be investing more in emerging markets, right? So to me, there is inherent contradiction in a lot of what we're saying in the sense that there is a funding gap. We're talking about bankability. But in reality, by sitting here, by being in Singapore, by talking about investability, we are really talking about distribution for scale across the region, right? And that's a huge problem when it comes to currency risk. It's a huge problem when it comes to distribution at the ground level. So in the sense that banks are the only vehicles that on a retail or business banking basis can actually fund distribution, how do we enable banks to get to the ground level in countries like Cambodia, Laos, Indonesia, rural Indonesia, in a way that is actually going to allow people to distribute their innovative products to the users that will make the impact, for example, in the agri-sector?
Thank you for that question. So actually, you're giving me the opportunity now to share about a parallel conversation happening right here in COP in Baku on Finance Day. It's actually a panel that my director is moderating on exactly this topic. And it's also the first time that the topic of insurance is being brought into COP. So insurance is a huge enabler. In fact, there's $19 trillion of climate finance that's currently locked. It's unable to be accessed. It's committed but unable to be accessed. These have been put in by energy companies, private equity, governments, but insurance is going to enable it to be locked. And this is especially important for developing economies where nobody wants to invest because there's too much uncertainty, not only on the political level, but really on just operationalizing projects in developing economies. So what insurance really does is that it de-risks projects, right? It's able to help investors with their return should something go south. But also it helps to catalyze innovation. So we really do need to bring insurance into the picture. And also for insurance, what is really meaningful is that it's catalytic. If there's going to be an insurance coming in on a deal, it's going to attract more types of finance. So I think insurance will help these lesser bankable projects, especially in these emerging and developing economies.
I'll do my small one because we're running out of time. I think for me, the growth piece is the most encouraging is how much we have a focus on price. Like I think emerging markets themselves, what we look at when we look at startups generally is we have to offer substitutes locally that makes sense. So to go back to the gentleman's question is, can we have a substitute that is coming at similar costs, but have some benefits on sustainability side? Realistically, I think we're getting there for emerging markets, but it hasn't been the case. So by the time that happens, then the realities of the markets just kick in, right? If the price match, not to discredit the financial organizations generally, but they have economic benefits, right? They still have shareholders and stuff like that. They can't do things at loss, right? So we do need those realities to kind of kick in to the stage where it's sort of an immediate lever for those solutions to kind of scale.
So I'm going to thank you for the question because it's the perfect setup for us to segue into the next panel or speech. Because one of the things that's come up is this is actually really the way that FinTech has a role to play. I'm reasonably cynical about FinTech as a concept. It's, it's technology with a finance use case. But when it comes to moving funds into emerging economies, actually it's proven to be very, very robust. So one of the guests that, you'll probably hear this later, one of the guests that appeared at the FinTech Festival last week was Queen Maxima of the Netherlands, who for the last 10 or so years has been, maybe 11, has been a great champion of financial inclusion to help people, help people who couldn't get access to finance get access to finance. And in her tenure, it's moved to 80% of the world is now banked in some form. A lot of that's down to mobile banking, peer-to-peer, technologies like that have accessed these markets. And so actually, I think that's part of it. I think it's not necessarily about the multilaterals, the big banks giving $100 million loans or, whatever the tickets might be. It's actually about the farmer getting their intermediary disintermediated so that OLAM can go straight to them, as Farmer Information Service does that. So that's, I think, where things have really started to shift for us. And so off to Singapore FinTech Festival we go in the recap.
Thanks a lot, everyone. Thanks a lot.